All right, we're live.
Ladies and gentlemen, thank you all for being here on the stock tank, where we have another contestant here, Adam from Finance 411. He's going to be kicking it off talking about HIMS and Hers Health Inc. Okay, this is a pretty interesting company, growing like gangbusters numbers. It's incredible. But we're going to be going over all those types of things. Whenever there's a hyper growth style of company like this, there's a lot of questions to see if that sort of growth is sustainable, and also if they're making profits. So, Adam, why are you buying this company?
The reason why I started buying the company is I actually use the products. These are the products right here. And
Gotcha.
I use them successfully for hair regrowth. I'm actually using it for a third time to grow back my hair now, and it's starting to work. So I used the product before I was an investor. I grew my hair back twice already using it. And I stand by the product. I think it's amazing. I don't think it's bullshit. I can tell you 100% without being paid for it that it works. And that made me look into the company.
Your wife is happy?
Yeah. I'm happy. She's the reason I started losing hair.
No, I just meant because their top product is ED.
The ED?
We can mute Tanner whenever we need to.
Yeah, I gotta take over for Amit. If Amit's not here, I gotta make a couple.
It's like 3 minutes in.
That's how they actually started with ED, and then they introduced hair loss. They also have acne, and for women, they have several products as well. They actually just introduced a brand new product, and they're introducing one towards the end of the year, which I'll talk about in a moment. So the reason I looked into them is just because the products were great. Then I looked at the stock, and I'm like, bro, we would be happy if PALANTIR is growing 30%. Meanwhile, and I'm not comparing it to PALANTIR, right? I'm just saying like that's the number. And all of a sudden, I'm seeing this thing is growing 94% quarter over quarter, 97% for the year. And I'm like, dude, that's absolutely absurd, right? Like, can we just be honest about that? That's a sick number. And after that, they're growing again 90, then they're growing 88%, then they're growing 83%. And I'm like, wow, the growth is just crazy. And that's why I started investing on it. And I started investing at like the $3.50 mark. I started talking about it, and I noticed no YouTubers are talking about it. Let me rephrase, very, very small community. There are, shout out to them, but extremely small community. And I'm like, this company has zero hype, no love. It's killing it with earnings. And the more I researched it, the more I liked the earnings and the financials about it, which I could get into. But that's the gist of it, how I got into the company, because I stand by the product that I actually use.
So, okay, let's just start with this. When did you start buying it? Like what time? I'm guessing in 2022 sometime. And then like relative to your portfolio, like how big is this as a position for you? Like, is it top 3, top 5? I'm not like, where do we baseline?
So I started buying it at like around a year and a half ago, I would say. I grew it from, I started at like 7s. I started really going heavy at $3.50, which was like a 52-week low. I just started going crazy. And I ran it all the way up to 12 and change. Now, the community might hate me, but the technicals that I was going over, and I was talking to Jesse about it, by the way, and and the technicals just didn't justify the price, the downtrend. And right before earnings, I'm like, I know they're going to kill earnings. They even have a tweet about it, and they're not going to be rewarded about it, even though they destroyed earnings this time and last time. So I ended up selling out of a lot of my position, and now I'm rebuilding my position. And for anybody that hates on that, I don't give a flying fizzle. It's personal finance, and I don't care if you guys like it or not, but I did what I did, and I shared that play with a few people that made a shit ton of money. I won't talk relative percentage of my portfolio, but I will tell you that it is a decent size 5-figure value, more than 10K, like a decent size 5-figure, whatever that means. So anybody, you guys can keep that. And I'm just buying into it like crazy. I'm doing a bunch of options plays, and I'm holding the stock itself. If anybody wants a really cool option, January 2025, $22 strike, and also January 2025, $20 strike. and the $15 was on sale today, and it got bought up like crazy. So when you're buying options for everybody, the options price does not directly reflect the price of the stock, and it depends on the demand for that actual option. So sometimes you'll have a really good discount in buying options. In any case,
Sure.
and yeah, I'm building up my position.
So I want to jump into some more technical things. If you have any graphics and stuff, that'd be great, because I'd love to see some charts on HIMS as well. But the first thing, because I don't cover healthcare companies a lot. Whenever it comes to the sections that they're in, whether that's erectile dysfunction, hair loss, all the other sectors that they're trying to get in, that they're showing off on their earnings results. How large is this total addressable market? Because obviously they're growing crazy right now, but that's could also be due to how tiny the company is. This is quite a small company, market cap 1.5 billion. Does this get to a $20 billion market cap in your eyes? Like, where do we go from here?
I mean, there's a lot of room to grow. The total addressable market, it all depends on the way you want to look at it. I'm not looking at it too much because it depends on what products they're going to bring in. It's going to be really funny. I'm gonna share a chart. Do you want me to send it to you? I sent it to you on X, or do you want me to share it?
Yeah, you can share it if you like. Just with the present button below.
1 second. So I actually compare the company a lot to. I compare the company a lot to SoFi, actually, and not a direct comparison, but the same thing, that the more customers that they build out, the more they can cross-sell products, and the more products they introduce, the larger their total addressable market is going to get. For example, if SoFi is going to start introducing business banking or custodial accounts,
Right.
they expand their total addressable market, which is one reason why I don't bank with them. They didn't offer that to me. I wanted them. They didn't offer it. So the more medication platforms or medications that they offer, the larger the total addressable market is going to get. I'm going to share it in 1 second. For example, they just started introducing cardiovascular, and by the end of the year, they're going to introduce weight loss, which is just expands it. So the more they get into, that market just keeps expanding. That's why I'm not looking at it so much, and there's so much that they can get into, right?
Right. Okay.
I would argue, though, the counterpoint to that is obviously, like, I understand it's an imperfect analogy, but so, for example, for SoFi, like, there's a lot of complementary services, but for this, like, I don't know how much they can cross sell. Like, it's almost like a stretch. Like, as much of a stretch as it is from one product to two, it's even more like exponential of a stretch to 3 to 4 to 5, just because you're gonna have like a super like niche market that has like hair loss plus ED plus anxiety depression, three other products.
Yeah.
So, like,
just because you can't get it up doesn't mean you're also fading in your hairline.
Yeah.
So that's an interesting thing, and another thing that they're doing similar to SoFi, and again, I'm not comparing them, is they're starting to use data with artificial intelligence to sell the products. For example, they just realized that 30% of their ED users have risks of cardiovascular based on the data that they have. So they're going to cross-sell them the cardiovascular pills that are stacked in the ED, which means you don't need to take a double pill. All you need is one pill, and it already does both. To answer your critique on that, I think that's pretty cool, which is, it shows me that they keep innovating.
So then a large part of their calls, then, in their earnings calls and everything, they do talk about cross-sell often.
Yeah, for sure.
Okay, cool. And like, I thought for a healthcare drug, I found it weird that they have an app and stuff like this. Like, people are that closely tied in with this company, and I wonder if I wonder if they have statistics or anything like that on app usage, or how they're actually cross-selling. If they have numbers for that, could be quite interesting.
I presented the screen.
Okay. Vadim, yeah, this is a direct-to-consumer pharmaceutical company that sells erectile dysfunction medication, hair loss, I think they have some skincare stuff. They're trying to get into a bunch of stuff, but honestly, mainly, if I'm correct, and maybe Adam can correct me, the large bulk of their sales is from erectile dysfunction medication.
So I read a statistic that it's 50%. This is what they're offering right now.
Okay, and Tevis, you were muted there.
And this is for women. Go ahead, Tevis.
No, I was just going to say, I think historically how they've been branding themselves is like at the intersection of all of the tough conversations that people are like nervous that like the more taboo topics that people are nervous to have. And that they're like a company that covers all of those. Like, and you can look at that through their lineup. I mean, the skincare, I think was, the relatively newer stuff, the weight loss, relatively newer stuff, but like the ED and hair loss, is definitely their bread and butter.
I'll make it very simple. They basically make the taboo and they make it sexy. They make sure that you look fly because you make sure you have hair. They make sure you got clean skin so you could pick up chicks in the club, and they make sure your dick works after that. Straight up. So this is something that all guys worry about, and they have the equivalent for women too. That's for sure. You guys might not want to admit it, but that's a fact. Nobody wants their shit not to work. Nobody wants to lose their hair. How many people are balding? It sucks. I'll tell you guys truthfully, especially when you're in front of the camera.
Yeah, no, and I was going through their website earlier whenever I was looking in the company, and they are not shy. Like their pills are like, no, this is what will make you harder. And I was like, okay, like they don't skirt around the issue at all. It's not like a traditional medication. I think they're kind of like, yeah, no, imperfections are a thing. We're here to solve it.
Check this out. They have a 90% reoccurring revenue. This is the stickiness rate. So they have a 90% plus, and 90% plus is actually 95% plus, but let's call it 90% plus. Very similar again to SoFi. Their marketing, except if they're paying for like paid sponsorship with like celebrities or something like that, they make their money back in less than a year. So if they put in $1, they make $1 back. This is their growth this quarter, 83%. Yeah. And their subscriber growth is 74%. Now check this out, just for you guys to see a really cool chart. And by the way, you might recognize this guy, Yemi Okope. Guess where he worked?
Okay, Braintree.
Right?
So tell me about management. Who founded this company, and why is he such a revolutionary individual?
This guy right here, Andrew Dudham. He's a little bit he's an interesting fella. His political views and him running the company. A lot of investors actually told him to keep your political views to yourself while you're running the company. But this is the founder. He just wants to provide healthcare at a cheaper than copay insurance product, direct to you, really, really fast. So you don't have to waste time going to see a doctor. And again, it's cheaper than actually paying your copay. But this is where it gets really, really interesting. Check this out. Look at this. Their subscriber count, 74% year-over-year growth. But this is not just 74% one time. Just look at this curve.
Sorry, is that in the
straight up?
That isn't it like in the thousands or like literally 1,300 subscribers?
1.3 million.
Okay.
It says in the thousands right there.
It is in the thousands.
Yeah.
Okay.
Yeah. Crazy. So, I hear what you mean. Yeah, in thousands. I'm sorry. I thought you meant is that like 1,300 subscribers. Yeah. So 1.3 million. Before this, they had 1.2, 1,916,000. I mean, they're growing at nearly and over 100,000 per quarter. And this is their revenue.
So is their sales and marketing expense like larger than 74% year over year? Because I'd be interested in that as well.
No, it's actually less. So sales and marketing equates for approximately 50% of their revenue, and they're growing by far more than that. And we can go over it. I have a slide for that if you want. But
has that been increasing or decreasing?
So this last quarter it increased, and because they're introducing also in general, their expenses increase because they're introducing those two new lines for cardiovascular weight loss, and they're trademarking something called MedMatch. So unlike a lot of companies that say AI, they actually are using AI and they're actually trademarking MedMatch. So they're trying to cross-reference your data based on the information that they have and try to see preemptively if you need some type of medication or not to suggest it to you. The reason why I'm giving them credit is because too many companies say AI and do nothing about it. At least they're trademarking MedMatch, which is going to come out towards the end of the year. So I don't know if it's going to be successful or not, but I give them a credit for doing that and actually utilizing the data.
So just really quick, because this investor in innovation, I've seen you talk with him a bunch on Twitter, I'm pretty sure. Is that correct, Adam?
Mm-hmm.
Okay. If he wants, because he's going crazy in the chat right now, if you want to also jump on, just DM me on Twitter, and you can come on and share the case with Adam and try to, get us to buy. And I'm close to buying this company. Some of the things that I found that I didn't like, or at least from what I could read, there was a short report that was put out that HERS growth has not been nearly what they wanted, and that they've been putting a lot of marketing dollars into the HERS side of the business to try to get that going, and maybe that hasn't seen the growth that they've wanted. Well, what do you think about that?
All right, give me a second. Take the screen away. Take the screen away. You guys want me to pitch you? I'll pitch you. I'm trying to be a little calm and let people speak.
No, get into it. Let's go.
All right, it's like this. HIMS is an absolute fucking monster. Their price to sale right now is 2.0 at a 730 share price. A year ago in May, at a 52-week low, it was 350, and their price to sales was 2.1. So today you're getting it cheaper than it was at a 52-week low. They're growing at an 83% year over year. The last quarter was 88%. Total year 2022, 94%.
Right.
Teladoc grew 10% year over year. Teladoc is a 1.6 price to sales. Just to give you a comparison, although they're not a direct comparison because they're doing different businesses. This thing is growing subscriber count by over 70%, and it's consistent. 70% is actually low. At one point, you can't hold those numbers, so it has to start decreasing. They met positive EBITDA 1 year ahead of schedule. 1 year ahead of schedule. Positive EBITDA. They are now negative 3 cents earning per share. They're coming close to being profitable, which they should get next year. This is the craziest shit. They were projecting that they were going to be growing at 70%. They end up growing over 80%.
Right. Okay.
Now, every single quarter, they sandbag the fuck out of their numbers. For example, the last quarter, they were saying that they're going to get in this quarter like 20 million less. And not only do they increase it every single quarter, they knock it out of the park the next quarter with already the increased expectations. Out of the last 8 earnings or 7 earnings, except for one, they absolutely destroyed it. And the last one, they just met expectations. For example, They raised expectations by 20 million. They beat on the top end and the low end. So they beat everything. And meanwhile, this stock is down. How is that even possible? Showing no signs of slowing growth.
But the stock did rise after hours, right? It was a massive, I'm pretty sure I saw it was up 15% after hours. And then it came the days following just completely under where they were even before earnings. What happened there?
It hit 18%. Then Moody's came out and they did the downgrade.
Okay.
Remember Moody's came out with the downgrade?
Yeah.
And then there's a couple of there's a large short interest. So there's some people that are complaining, not complaining, they're putting out short reports.
Yeah, yeah.
I don't find it a good look. At the end of the day, all the numbers that I gave you are just absolutely it's sick numbers. It's sick numbers. You can't even every single quarter they raise guidance, and the next quarter they smash the raised guidance. Forget about the lower ones.
So I find with a lot of hyper-growth companies, there can be hidden metrics. By the way, Tom Nash is here to support you, Adam. He said specifically.
Tom, what's up, my man? Yo, thank you so much. Спасибо, брат. Спасибо большое.
So what is the stock-based compensation like? Because I find the hidden metric in all hyper-growth stocks that gets... I'm
going to get you the chart in just a moment.
Okay.
But it's basically going down and steady for the last year and a half. I'll show it to you in just a moment. It's beautiful. There's no hidden metrics. This is just gorgeous. And if you go back on the screen, just to show the screen, there goes your answer about how many people actually use online with the app. You were asking that.
Yep.
The royal purple is in-store purchases, and the bottom figures are all online. So as you can see, they remain very lean.
Right, but is that like because obviously like I don't mind on or like online purchases. I just thought it was weird that like a pharmaceutical company had like an app for a specific drug. And maybe that's more common. Like I honestly don't have a lot of experience with the healthcare industry, so maybe that's more common than it is. But yeah, I just heard small critiques in this business where people thought that like, yeah, I will, Tom, I will. That was really, really exciting. That being said, sorry, I don't know if you have any details on this, but a large percentage of their actual overall earnings had to do with just selling Viagra, like other companies' drugs. Is that essentially like is there a problem there or?
No, so they were selling their own version of Viagra, and actually they just first of all, this is stock-based compensation.
Oh, okay.
I mean, it's beautiful. You can't like it's super steady, plus or minus a few.
What happened between Q1 and Q2 2021? Like, how did it drop?
That's probably IPO.
Yeah, they actually were. Bro, you're gonna laugh, and I'm gonna keep saying this. They're so similar to SoFi. They were also a SPAC, and they're one of the few SPACs like SoFi that's not only surviving but thriving.
Right.
I know. I'm gonna keep doing it because you guys understand SoFi, but the more I looked into it, I'm like, wow, there's a lot of similarities over here in terms of the vision and what they're doing and how they're growing. But stock-based compensation is absolutely beautiful.
So maybe we can jump back to that last chart. Adam, do you have any visit or has management highlighted in the call like what their vision is for the wholesale department? Because that whole side of their business is just flat, you know? So I'm just curious as to like, they have this secondary revenue source and it's not growing and it's just probably the thing that has most costs for them. So I'm just curious as like, how is management thinking about that?
I wonder if they even are at all.
Yeah, they're not concentrating on that because the only markets that there are in right now is United States and the UK. They have so much more penetration across the world to go after. And for me, their in-store products is essentially like brick and mortar.
Yeah.
And
but so one of the things that I struggle with the most with companies that are growing like this as well, because the growth is slowing. It's not like accelerated growth. It is slowing. We're still in the 80%, so there's a long way to go before it ever gets scary. But it is hard to value that. And then I also think of like, do we have any numbers on the amount of people in the United States or wherever they're in that? And by the way, are they in other markets other than the States?
Yeah, they're in the UK market and they're going to expand to other markets, but mostly US and UK as well. Okay,
so who has, erectile dysfunction problems as a percentage of the population for US, UK? How big does this get? What percentage of the market is owned by other companies? I'm sure they're growing as a percentage of market share. How sustainable is that going forward? I guess that's a bunch of questions that I'm having. But then I guess it's expanding into other areas as well.
Yeah, again, they're gonna keep Dick Insurance. I don't know, man.
I'm being a mitt for a second.
There's gonna be consistently new medications that they can offer, but I'll give you an example how they're innovating. So they introduced something called hard mints. So instead of just giving you generic Viagra, they came out with hard mints. So if you on a date and you're hanging out, you pull out a mint, nobody knows what you're taking. That's one. Two, the packaging that they send you, it's a sexy package too. I know you guys don't think about that, but it makes you feel good ordering something that most people are afraid to talk about, Yeah,
so the problem though is like even things that are not what do you call it? They're sort of taboo to talk about. You can't walk around with your hard mints pack and pull it out as if it's a normal mints thing. Like people are going to know that's the hard, like eventually there's going to be other people that know exactly what you're using.
How, bro? It looks just like what's it called?
Well, it's going to be other.
There's no way that you get from that, bro. That it's. Are you kidding me?
Yeah, but
There's
it's
no
other, it's
way.
other. There'll be other hard mints users. You know what I mean? Like people will recognize the
So
package.
you're not. So who cares? You're not trying to hide it from other people that are using ED, and you're not trying to hide it at all. You're just trying to look sexy about it.
Tanner's asking how big. Okay.
You know what I mean? You're just trying to look sexy about it. You're trying to make yourself
Yeah.
feel good. That's it. That's the whole point of it. HIMS gives you a product. They give you a great product that works cheaper than it would cost to than copay, and they make you feel good about it. That's it. And that's how they keep innovating. Look, they didn't need to come out with that mint. That just shows you that they're trying to come up with new ideas, repackage things, make things a little bit better for you to use.
That is
that's a good package. I mean, it's
Right?
I saw you struggling to find it. It's all over the investor relations page.
my Google ads are gonna be fun right after I do research on this one.
Right. That
Look,
being said, okay, there was also, because obviously it's a D2C company. I'm sure this has to do with a lot of their cost cutting efforts or what they're talking about with scale. But whenever you start getting into really high quantities of shipping products, what are they doing to keep the cost down on shipping? And then also, I read something about them actually, and I'm going to potentially butcher this, so please save me here. But buying their own pharmacies or getting their own sort of labs to actually make products faster and cheaper. Help me with that.
So they work with several different pharmacists, and they work with 600 doctors, if I'm not mistaken.
Okay.
For the doctors, to keep their doctors, they pay them going market rate in their area. And as per CEO and as per the company, they're saying that the doctors love working with them because everybody wants to work from home. Why would you go to your office when you can work from home? By the way, there's a sheet that I'm sharing right here if you guys want to take a look at it. I know Tanner is going to be all over this. I know he likes things like this.
Got to zoom in on this one.
Yeah, you're going to need it.
My bad. More?
All right, what are we looking at here? Just their financials?
This is actually a spreadsheet that one of the HIMS community actually gave, and Tanner was asking a lot of questions. So about the profiting, they actually growing their gross profits. Their gross margins is actually growing quarter over quarter. They did 81% this quarter and 77% last quarter. 80% last quarter. They guide for 75. They end up beating the 75. So it's actually growing in some metrics.
They were at 80. They guided for 75 and came out at 81.
Yeah,
that is ridiculous sandbagging.
And they reinvest the margins into the companies to give you a better experience, better user interface experience as a customer, to make it as simple as possible to go through it. But yeah, these are the numbers right here.
Think about that sandbag for a second. I know that's a 6% difference, but what it means from the quarter before is they're saying, no, there's going to be a large drop off in the percentage of gross profit that we saw quarter over quarter. And then not only did that stay flat, or they beat it as it fell less than we expected. No, it actually grew. So you beat it by like a factor of so many other, like, not only was it not as low as you thought, not only did it stay the same, it actually came in even higher. That's a insane beat.
Yeah. So even if you look at their investor relations, I'm sorry, I got to keep going back and forth. So if you're going to look at their investor
I think this
relations,
is a good comment. Like this stigma, I think, is just a number one value prop for their entire product line and for their entire business value proposition in general.
Right.
So
from what I'm seeing, though, the CAC cost on this business is so big.
The what?
The customer acquisition costs, like the customer acquisition cost is like $500 per person.
Yeah, but if they have a stickiness rate, you end up getting that money back.
Sure.
Especially, look, I spent $65 on hair products alone. I'm going to be spending that forever.
Right.
Because I don't want to lose my hair. When I stopped using the products, amongst other things, I started losing my hair again. I don't want that to happen. So I'm not going anywhere. So the average customer is giving them $53 a month, their average customer, which is increasing.
Yeah, and like I said, it's not something that can be a killer of a company if they're already telling you there's going to be a year to get it back. But they are saying already, what I'm reading here, is that their CAC costs have actually been increasing year over year. So I don't know if it's harder for them to find their next client or like that's, yeah, I don't know. That can always be a problem, especially with these companies that are growing like crazy, is like you might just like fill your market. And then, what's the next product? And are you actually are those products working for you? I don't know.
Adam, do we also have any numbers on like the lifetime value of the cohorts? Like, let's say a cohort that they signed up in 2017 or 2018, are they still like, what percentage of that cohort is still subscribed? Because I think that would be indicative as well of like the payback periods with regards to their CAC.
They do have 90% retention on revenue. It's just what does that look like from a client that subscribed back in 2017 or something? Who knows?
So this is one of the things that we were talking in the HIMS community. We don't actually have that number, and that's one of the things that we're kind of upset about, that they're not giving us the specific numbers. So take it for what it is.
Have they made any large acquisitions? I'm seeing like small acquisition related costs in their numbers. Is there anything that they've ever come out and said, you know what, we've bought in this drug company or something like this?
Travis, what are you looking at? Some funny comments?
Ignore me. I can't.
I took the comments off. Not that I know of, Tanner. Not that I know of.
Okay.
But this is the EBITDA right here, by the way, which they end up getting 1 year earlier than expected.
Got you. And so what are they saying about what are they saying about the margins for next year?
They're saying there's going to be 75% plus again.
No, I mean the adjusted EBITDA margin. Sorry.
Oh, 1 second.
They're saying 4 to 5% for full year 23.
Okay.
So I just want to say that this number right here, full year 2023, was 830 million last quarter. And then the quarter before that, they had this number at like, I think 800 million. So that's what I was talking about, that they keep increasing their...
Can we stay on this page really quick? 2023 underlying themes, 85% long-term retention.
So that's there. 2 years plus. If you just hover over that, Adam, does it say any information? Because that's what one of the comments
right here. Online revenue retention from subscriptions with a tenure of at least 2 years.
Yeah.
Payback period defined as the time it takes quarterly cumulative online gross profit generated by HIMS and HERS. So this is for 2 years. If you're using HIMS for 2 years, you have this is the retention rate.
Okay.
Now I want to read the comments now. This guy got me
Why is the year-over-year growth for next quarter? Like, are they just sandbagging like crazy? Because didn't we just do like 83% and now they're saying 50%?
Yeah. Like I said, they were estimating that these last 2 quarters were also going to be in the 50s, but they ended up coming in at 88 and 83 respectively.
Oh, and what does that look like quarter over quarter? What did we do for revenue this quarter?
This quarter we did 208 million. Last quarter 191.
And they're expecting 212 to 220, 217 to 222.
Yeah.
Yeah, that's probably why it's selling off as guidance.
Yeah, but that's not what's going to happen. Just letting you know.
Well, that's true too. Just I mean, if you have a record of just dominating expectations, then
if you pull this up on TradingView, I'm having a hard time pulling up the screens. You'll see that they keep destroying earnings. So yeah, maybe some people don't know this and they don't expect it. That's fine. I'd rather keep buying at a cheaper price, and we're just going to keep killing expectations. But their expectations for 2024 is 1.2 billion. That's like their long-term goals. But that means they're only going to grow 40%, and they haven't raised that for the last like 3 quarters. And people asked, why aren't you raising that? And they're like, that's our floor. That's what they keep saying. They're like, don't worry, that's just the floor. In other words, we're guaranteeing 1.2 billion.
Sure.
Can I pivot us away from numbers for just a sec?
Yeah.
Because I just have sort of one question that I'm trying to figure out, Adam. I understand the value proposition. I understand like the stigma associated with like, the whole mission statement of the company and what they're trying to solve. But this is a gigantic total addressable market. What contributes to their moat? Is it just the better user experience? Like, what is the non-replicable thing that makes them special?
I think a little bit it's social media. It's the cool factor, unfortunately.
But that's just sexy marketing.
Yeah. But
So it's a first to market advantage that they came up with the system of offering not just like one product, but a larger solution of taboo products.
But like they don't even have that. They have 1.3 million members, man. It's like Snapchat in 2014 introducing like stories. You can't argue first to mover advantage, right? Because like a big dog will like. So what I'm saying is like, what is stopping one of the biggest healthcare companies in the U.S. of just offering a ton of money to their director of marketing, their VP of marketing, and then all of a sudden they have a sexy brand campaign, and then they do the bundling similar to HIMS, and they roll out a subscription. Like what I'm saying is, what's stopping people from just copying them, like bigger players?
So why haven't the bigger players came in yet? But to answer your question, I'll give you why I believe that they're going to win, and you guys could agree with it or not. They have first mover advantage. They're growing at a huge pace. They're going to use the data from the growth of their customers to cross-sell more products, and they're going to keep introducing newer products on the market. For example, the cardiovascular and the weight loss. And they're going to keep doing that, rinse and repeat. At the same time, they're going to make you feel really good about yourself. And once you're using their products, you have no reason to leave, because if their products are working for you and they're making it super easy for you and they make you feel good about it, they're literally shaking your hand as they're selling your products, you're not going to be leaving. Nobody's going to acquire you specifically if you're already using HIMS.
Yeah, they
and
are.
Then you have that sexy factor.
They are if they do have. Let's just say a competitor does have that sexy factor, and they just offer, I don't know, $10 cheaper a month. You know,
yeah, I mean, this is literally
bleed.
So this company, Spruce Point Capital Management, put out a short report on this company a while back. And that was like one of their top 3 points, is that they said, we believe HIMS faces enormous competition while having developed no sustainable advantage beyond its brand, which we believe has been sustained by outrageously large marketing expenditures. Which, like, I don't know. I think there's a lot of companies that probably have that exact same problem as well. You'd probably look at like a Cash App, for example, that like a large percentage of people that are on there are, you know, on there because of the brand. But then again, I'll even counter myself by saying that you're on there because your other friends are on there. You know what I mean? Like HIMS is not like, oh, all the friends get together and we all have hard mints, you know? Or maybe you do. I don't know. But that's not, I don't know anything like that.
I mean, sure, you have a lot of options where you can go to. You
Sure.
know, you can go to SoFi, you can go to Ally Bank, you can go to Lenders Club, but at the end of the day, SoFi gives you a better package, they give you better products, they give you better pricing, and they make you feel good about banking with them. And they're going to keep
Right.
introducing new products. It's a similar situation. Again, I'm not comparing them, but at the end of the day, what makes SoFi so special? Why can't somebody go to Ally Bank? Because SoFi offers more products. They make you feel good about using their products. Their customer service is kick-ass. They're super sexy. Their CEO is in your face, and you feel good about using SoFi. And they give you, you know, that experience. At the end of the day, like,
So
that's what it is.
So let's dive a little bit deeper into that that CEO really quick. Has he put the company in hot water? Like, has the stock dropped the way Tesla did whenever Elon Musk took out that joint on Joe Rogan? Like,
He was also
how
the
much?
founder, right?
Could you drop this thing for a second?
Yeah, sorry.
Do you have anything like? Because you said he speaks politically. Like, what does that mean?
I prefer not to get into it, but he hasn't done anything that put the company into hot water.
Okay.
Just he has some views, and at one point, a couple of times, he had to like put his Twitter on private, for example, to the point that so people don't see his tweets. He's very outspoken. I find that he came down a little bit. I don't know if this was pressure from the shareholders, but people were complaining that the price is going down because he's doing a lot of talking. I don't think it's to that extent, but he's very outspoken to a certain group of individuals with his political views, and that's fine. Just keep it to yourself. And he's not an Elon Musk. Nobody is. He's the only one that can get away with speaking his mind, Elon Musk. So it didn't really hurt the company. He should do more earnings calls. He was on the last earnings call. People were complaining that he doesn't go on earnings calls. Very similar to others, but it feels like he's working on it. At the same time, I can't really complain about him as the CEO because he's the one that brought the company to where it is right now, and he's a founder. So I can't really say nothing. I'm just giving you guys the good with the bad from what I could tell.
Yeah, I mean that's small. I find people that complain about that, it's like it doesn't matter at all.
But
I
I
remember
want to
there.
say one.
Sorry, go ahead.
No, I want to say, look, there's already competitors that offer hair loss products, that offer Viagra's, that offer online telemedicine. The thing that's cool about HIMS is they offer telehealth communication, telehealth medicine, but the telehealth is the actual means to an end. The end is actually pushing their own products. And that's how it works out. And I think they're the only ones that master that so far. And then they put a ribbon on top to make it cool and things like that. But mastering that telehealth product, telehealth product is what helps out.
So has there been any like large partnerships or anything that has completely changed the business, or that they're looking at getting? Like, I don't know if they're on Amazon or something. Like, has there been any sort of like large things that might change the business going forward? Like, for example, like SoFi getting a bank charter. What's the next big growth curve for HIMS, or is it just new
Like,
product rollouts?
I guess the weight loss and the cardio stuff. Maybe we could talk about that.
Yeah, the cardiovascular is really big, especially because they're stacking the medicine into one pill. Now, I know it's not going to sound like a big deal, but the path of least resistance, where you can stack two medicines in one pill, they also do it with their hair loss. That they have a lot of competitors, but they don't do that. For example, there's two active ingredients in hair loss, minoxidil and the finasteride or some shit like that. I'm pronouncing it wrong. Most people have both sprays or both products, but they combine both into one spray. I know it sounds stupid. You're like, yo, that's not a big deal. But stacking things like that is what gives them these little innovations. You can only be so innovative in this type of market, which is one of the criticisms that you guys are saying. And I hear you. And that's how they counter it, exactly like the hard mints and things like that. They're going to keep introducing answers like that. Also, they stay under the radar because they don't want to introduce like narcotics type drugs. That's how they're staying under the radar from the DEA. And the DEA was coming out with a law that says that you have to see a physical doctor. You can't do telehealth if you want to prescribe like narcotics type drugs, like you guys know painkillers.
Yeah, but they do want to get into things like pain management and stuff like that. Doesn't that kind of get into the narcotics?
As far as I understand, and the CEO came out and literally answered that DEA thing, because of course there was a short report, HIMS is gonna, die, and they're like, listen, I'm specifically staying away from this stuff because I don't want to be under the DEA.
Sure.
I want to do clean medicine that we're not gonna have crazy lawsuits, we're not gonna have any static, we just want to move forward. So the growth factor
do have a couple. I'm not going to get too on your case, but there are a couple things here that they say they want to get into that definitely would be, in my opinion, you start putting yourself under the thumb, like pain management, substance abuse, testosterone. I don't know. Like there becomes a lot more oversight whenever you start getting into drugs for substance abuse.
Where are you seeing that? Share the screen.
Yeah, it's on there. Here, I'll share my screen. So this also does show. I just found this. It does show actually estimates where they're talking about population here, just on the right here. Let me actually.
Mm-hmm.
So just products that they're in right now, ones that they want to get into, like the heart health one for cardio. What I wish they would do, what I would love, and maybe this would bring a lot more conviction for people, is show, similarly to SoFi, you're not just showing growth in member numbers, you're showing growth per product, right? And so we don't know how well birth control is doing, which is a massive opportunity, but how well is the HERS product for birth control? So as I was just going down, sorry, it's so mental health, they have substance abuse here, is future products that they want to get into, pain management, weight.
But all of these, testosterone, for example, if they have not all testosterone, not all pain management, not everything that you just mentioned, is certain schedules of drugs that would be under the DEA's purview. So I'm not a medical doctor. I just know that the CEO came out specifically when there was a report from the DEA, and he says, we're specifically staying away from anything that's legally questionable that we can get like in trouble with.
Right.
Or
I would also
we don't want any of that.
I'd also imagine there's also like an extra set of hoops they need to jump through for them not to even be OTC, right? Like if they want to still be over the counter, you can't prescribe a lot of like hard stuff that you need subscriptions for or
Right.
Yeah.
doctor's notes for.
There,
On the point, Adam, of the stacking, I thought that was really interesting, and I think that is something that has a potential to be a competitive advantage in itself. I guess a couple of questions around that. Is this something that's just like patented to HIMS, this method of stacking, or is it something that is copyable by others? Have we seen anybody else do this in the space? And also within HIMS themselves, like how are they determining the stacking? Are they just saying, okay, we have the biggest like grouping of cardio and ED, let's say, or PED, whatever.
Sure.
That's what we're going to stack, and then we're going to offer that as a secondary product line? Or is it more on a custom, like tailored basis?
Okay, so that's a great question. Thank you. So the stacking, it's not exclusive to HIMS. You could stack. ED came from basically they were trying to get your cardiovascular, like your blood pressure down, and that's where erectile dysfunction drugs came from. But HIMS would be the most public that does that, if that makes sense. Like on a big scale company that does that, from my understanding. It has been done before. The CEO even mentioned that, but this is where the kicker is. So the CEO says, we know that based on the information we already have, 30% of our ED customers would need cardiovascular. And since 1/4 of deaths in the United States, I think it's like 80 million, are due to cardiovascular, we can preemptively make sure that that doesn't happen and save lives. He says the way we're going to take it a step further is this MedMatch, which they're trademarking, and they're going to use artificial intelligence. Now, I'm not just saying AI just for the hype of AI. I'm saying it because they're saying they're trademarking a platform to be able to use all the data that they already have to better give you a custom medicated fit. So they are trying to tailor for you specifically the medications that you need and be able to stack it and cross-sell with other medications. As they grow, they'll be able to offer you more things. It's going to be very hard for a competitor who's not, let's take two competitors, a huge company and a starter company. A starter company is not going to be able to compete whatsoever because they don't have the data and they don't have the customers, and they're not going to be able to acquire enough customers to have enough data to be able to compete. So anybody coming from small is not going to be able to compete. And then you have the large companies that, yes, possibly large companies are going to have the data. They're going to be able to compete. However, it's not a winner take all. There could be other competitors. HIMS has a solid niche right now, and they're going to keep building on their solid niche. So people think that HIMS is a pharmaceutical company. They're not. They think that they're a telehealth company. They're not. They're a hybrid somewhere in between, and they have their own branded products. And that's what gives them a competitive advantage, in my opinion, against the small guys and the big guys. Like, I know Amazon has like Amazon Pharmaceuticals. Well, that's great, but that's not exactly the same thing. It's a different type of product. It's a different type of service.
But
and at a $1.5 billion market cap, bro, they can grow to, 20, 30 billion without ever having to get out of their niche. Just offer all those products.
Yeah, sure. No,
Yeah.
I believe that. But just last question on the stacking. Like, what is it about the stacking itself that just, even not from a competitive aspect, but just from a utility perspective, that more large companies don't do this? Is it technology barriers? Is it data barriers? Or is it just the cost of doing it is too high? Like even a large, like, I don't know, you name me, a Johnson & Johnson, that's not even going to compete with HIMS. Why don't they do stacking more? Like, why don't I see it more often?
Because Johnson & Johnson is not giving you specific medication for you. Johnson & Johnson.
Whoever, I mean, it's just the first name that came to mind.
I'm just saying that I don't know too many companies that does what HIMS does. That's what I'm trying to say. They have first mover advantage. So anything that they do, even though they didn't invent it, it's almost like it's their proprietary technology. Yes, it's been done before. However, not on a large scale. So yeah, somebody can prescribe to you ED medication and cardiovascular medication, especially if you ask a doctor. They'll say, oh yeah, there's a version. We'll just cross do it, give it to your pharmacist. He's going to give you 1 pill instead of 2 pills. I don't know anybody else that's, instead of you coming up and saying, hey, doctor, can you please do this for me? That somebody's saying, hey, Tevis, I don't want to use Tevis. God forbid, patient X, listen, we see some questionable activity from the medications that you're taking between your dermatology, your ED, and your hair loss. Since you're 25 years old, you shouldn't have this. Because of this, we think that you should see one of our doctors for cardiovascular. And based on the data that we have, we already think it's blah, blah, blah. Come see the doctor. And then the doctor is going to say, look, I realize that you have a probability of some cardiovascular disease. We can help you with this. Why don't we stack it for you so you don't have to take any additional medication to make it the path of least resistance? That's how I can explain it, HIMS. While nobody else is doing that because nobody gives a fuck. Johnson & Johnson, all these competitors, pharmaceuticals, Amazon, it's all about what you're asking them. But nobody's saying, hey, we think there's a bigger problem here and we can help you with the solution, specifically to the customers that they have.
So I have a couple more questions just about the product, because I saw that they have some sort of fulfillment capability. 70+% of their things are done through their affiliated facilities. And then this Arizona compounding unlocked proprietary products for their compounding pharmacy. I just wonder, like, what does that lead to? Like, I don't know if you guys are even knowing what I'm talking about. Let me share my screen. But I have a hard time understanding this compounding pharmacy thing and what that means for the value of this company going forward. Like, how much of a save on their costs does it mean for them to have new? I don't know. Like, to me, that sounds like a lab, but I'm not even sure. Yeah.
I wouldn't even be able to answer that. I'll be honest with you.
They don't talk anything about that on saving costs or whatever on the earnings calls of, like, what they're doing.
I didn't catch that.
Okay.
If they did, I don't recall them talking about that. I know that they have a large network. I know that they treat the people that they work with well, from my understanding. That's why they're paying them, there goes to who they're working with. And this is their flywheel, by the way.
So then lastly, okay, let's just talk about the actual stock then. Because they've got a brand, people love it, everything like this. There's an 11% short on this company. That being said, 63% owned by institutions. So actually, like, much larger than SoFi, like almost double. Insiders are held by 13%. I'd love to know if you have any information on insider selling or buying. Yeah, things like that. And then their cash and debt, like their balance sheet. I'd love to know more about that.
Actually,
can't hear you.
Sorry, there was actually somebody that posted, and I forgot which channel member. Oh my God. There was somebody that actually posted how much the insiders are holding, and I believe that they have a sell at a certain price for their options. I don't know it off the top of my head, but I know somebody posted it earlier today or yesterday that I saw. So I can't really tell you that right now,
okay,
to be honest. I know the CEO holds a shit ton.
The Oak Tree was the one that led their SPAC. Was that the Howard Marks? That's pretty cool.
No, this could be really big. Like, I think, like, in terms of subscribers, if they can, I just wish they were bringing down their CAC costs. Whenever you're raising CAC costs like that, and also you're gaining subscribers, I find they're needing to target stronger and stronger to find those very specific clients that they're looking for that actually want their products. Especially if you're opening up for a larger breadth of products, that your CAC costs essentially should go down. Like, if someone can find you and then they have offered, 6 products instead of 1, it should open it up a little bit more. That being said, it can be normal, but, like, do they get to 10 million plus subscribers? Like, is there a market for, that style of
I'm laughing.
Wait, one sec. I just want to
this is the schmuck.
So someone in the chat said CAC costs increase due to entering new product categories, I believe. I would say you're wrong.
Don't make me open the chat, please.
No, there's one thing in here saying customer acquisition costs increase due to entering into new products. That should not be the case. It should honestly be the other way around. Because here's the thing. Here's the thing is that one, there's usually whenever entering a new market, if you're entering it with a great product, right? If HIMS hair loss or their next products like their cardio things are a very good product, hopefully in some sort of regard they're a better product than their competitors that they're entering, that there should be a large amount of very hot leads. Okay, people that are really excited, heard that the product's coming, getting ready to sign up the second it launches. SoFi, you'll see that whenever they launch business accounts, for example, people know it's coming, people are ready, people want that product. And so like there will be existing clients that can go and cross-sell over, or even other ones. Like, for example, maybe someone says, oh, you know, I use them for this. They've got this product coming out. That's now they're like at least a warm lead, right? People should now know the brand a little bit more. CAC costs, whenever expanding into multiple products, should go down.
Look, all I know is the company is growing at a crazy rate. They're acquiring new customers at a crazy rate. Their retention is at a crazy rate. They reached EBITDA, positive EBITDA a year early, and everything's going up on the company. Yeah, maybe some of the numbers are slightly less than absolutely fucking amazing. That's cool. But for the most part, it's all great to absolutely astronomical.
Do they have debt?
That doesn't mean anything though. Like you can find a company that's growing at 400% year over year. That doesn't mean anything if the valuation is also pricing it at growing at 400%.
So, okay, hold on, because I'm curious about valuation as well. Before we go into like valuation and targets and all that, do they have debt, and what's their cash position?
I believe their cash position is 65 million, and I don't think that they have any debt.
That doesn't sound like a lot at all.
Well, I'm just reading on Yahoo, so this is a lot of the times inaccurate, but it's saying 191 million in cash, 5 million in debt.
Possible.
But I just wanted to make sure that is correct, because like that
5
is
million in debt.
What?
Just 5 million?
Yeah, like a debt-free company.
No debt. No debt. 170 million. Cash 170 million. No debt.
Yeah, it's a good place to be.
Okay.
So go ahead.
Have they ever put out like offerings selling stock to try to raise capital for future expansion? Anything like that?
No, they don't need it. What's the point of it? They don't need to dilute their shares in any case. They have enough cash. They don't have debt. They're expanding as needed. They're not rushing any products.
So Adam, you bought this initially, in the sevens. You bought it again heavily at 3. You sold it. I believe I heard you correctly when you sold some at 12. You're a buyer now. Like, walk me through like what's your thought process with regards to this position? Is this like a buy and hold for the long term? Is it more like a 12-month, 24-month? And then what are also like? Are you looking at any targets specifically? Where you saying, okay, it's not worth it above this price or below this price?
I mean, I got to see where the numbers are going to go. But in general, I always had a number of $15, even when it was running up to 12 and change. I said that when it runs up to 15, I would reevaluate it. I based it on comparing it price to sales and the growth rate compared to a lot of other companies, including Teladoc and a couple of other ones. By the way, the person in the crowd that loves Teladoc, go fuck yourself. That's all I wanted to say. I think that's the same troll that keeps trying to bother me on Twitter. It's so funny. I hope you enjoy your 10% growth, whack ass company. Teladoc. Anyways, so $15 would be the price that I would start analyzing it. The only problem that I don't like about HIMS, and for me, it really sucks, is you can't do covered calls. There's no weekly covered calls. So I love covered calls for SoFi, for Palantir, and my other stocks, which gives me essentially a dividend on my play. I don't have that with HIMS, which really sucks, because if I'm getting that synthetic dividend, I don't really care if the price goes up or down. I'm still getting my weekly salary. So that really sucks for me. I got a couple of calls for the end of for January 2025. Let's see what happens in 24. Also, HIMS is a good a good bet against the market. I know it's going to sound crazy, but in 2022, when everything was going down, HIMS was the only thing going up, one of the few companies. So, and if you look at the market, when the market does good, HIMS goes down. When the market starts going down, HIMS goes up. Maybe it's just a coincidence, probably just a coincidence, but it's also like that makes me feel good when I buy into HIMS. So yeah, $15 is my price target. Not that I'm going to sell out of it, but when I'm going to reevaluate it and based on their growth and things like that. But that should be right around when they're going to get GAAP profitable, which is going to be next year. And we love GAAP profitable companies.
No, I think that's it honestly, I want to be really hard on this company because I think every investment needs, like, you need to be really hard on your investments to make sure that what you have is true. HIMS is growing subscribers like crazy, and the amount of multi-month subscribers and the low amount of churn is like, it's unbelievable. Okay, their multi-month subscribers is crazy. So honestly, I'm very happy with it. I'm not a shareholder, but this is one that I've been looking at more and more whenever I'm not looking at fintech, which is rarely. It's just a matter of like how big the actual total addressable market is. And the comments that you've said about the CEO does scare me. A really hot CEO like that has to be extremely good to offset the crazy crap that could come out of their mouth. You know what I mean? And a lot of the times you want a CEO that kind of just sits down and does their job. But anyway, I'll leave it off there. I also wanted to add that HIMS, it's not just Adam that likes this company. Wall Street kind of likes this company as well, putting an average price target on this company of $12.80. Even looking at some more freelanced, freelanced analysts as well, like on Seeking Alpha. They're especially strong on this company as well. It seems like the community overall is very positive on HIMS. And institutional buyers, although being 10% short, you have still 50% of them that are long, much higher than even companies that I like SoFi, for example. So
like, why? Okay, so I know this is like a semi-rhetorical question because like we get asked this question for SoFi or all growth companies all the time, but like if institutions are bullish, if retail is bullish, if the company's 8 consecutive quarters of over 80%, if they have no debt, if they have ample amount of cash, if everything seems great, like why is it at a 2 price to sales? Like what am I missing? Is it macro?
Listen,
and it could be, and like
not a single analyst has it under $10. So it's not just me, it's not just the community. Bro, like Tanner just said, Wall Street is saying it. Like it's crazy.
Yeah, and I'm not even sure that, like, I don't know this category well, but like just to price it out as price of sales, I think is like healthcare could be low on price of sales. I'm not even sure. Like,
well, if you want to, again, I just want to compare it to Teladoc because that's like the face of telemedicine, right? Online health. That's like the face as far as I would say.
Are they considered comparables? Because I thought they're like different businesses. One's like meeting online on Zoom.
Yeah, they don't have products, do they?
No, so they're both telehealth. That's why the guy in your audience that keeps screaming Teladoc, bro, he's mad stupid. It's not a comparable company. But if you want to take telehealth, telemedicine, which is like the greater scope of both these companies, Teladoc is growing. I did it with all the companies, by the way. Teladoc is growing 10%, and their price of sales 1.6. They are growing over 80%. Their price of sales is 2. Now, I compared them to a couple of other comparable companies as well, not just Teladoc. I have a video about that. And they were the cheapest out of all companies to buy in terms of that. So what I think you have over here is a great opportunity to buy into a company that has a mega growth story. Now, a lot of people are going to say, but they can't sustain this, but in the future, it's going to go down. But the reality is today, they are sustaining it. Today, they're still growing at a crazy level. Today, they're increasing their margins. Today, they're increasing all of their clients. What happens tomorrow, we can't guarantee. So we could only make our investments based on today and assumptions of what will happen. Anything can happen tomorrow. You can say that about any company. Palantir, SoFi, Amazon. Bro, right? NVIDIA was supposed to die. Everybody was going to work from home. Nobody was going to buy computers. NVIDIA didn't die. The stock price went up like crazy. So you can say anything about any company you want, right? Meta was dead. It was dead, right? Nobody uses Facebook anymore. Well, Meta is a huge company again, right? So you could say anything about the future, and everybody has opinions, and that's fine. But my opinion is, based on everything that I see, this company has a lot of growth in the future. And the way I see it is, I'm not even looking for a 10x. If the company has more growth tomorrow than it does today, it's a good investment for me. And HIMS, at the very least, for me, is a double up because it was already at 1250 and the numbers just got so much better. So why not 15? That's all.
Yeah, no, thank you so much, Adam, for coming on. Really do appreciate it. Unless Tevis has anything else to say, I really do appreciate it, man. This has been a really fun episode. HIMS is definitely a hyper growth stock and one to keep an eye on. Hopefully, you know, they break into profitability and become exactly what everyone wants to see, because nothing would make me happier than this stock running up to $20, making everyone a fortune. So,
can I say one thing?
Sorry?
Can I say one thing before we go?
Sure. I feel like it's going to be a terrible thing to someone in the comments, but go ahead.
I wanted to make an apology to Honest Chill. He's pushing Teladoc. I apologize that I've been mean to Teladoc, and he was saying that Teladoc has a moat and HIMS doesn't. So listen, I agree with you. Teladoc has a moat. The only moat that they have is the moat that they're drowning in with 10% growth. Whack ass company. Enjoy that. Enjoy that. Enjoy that.
Chalk Talk did say that average order value went from 69 to 95 in 3 years. It should be mentioned. But I'm also seeing like their revenue per user is kind of just staying like kind of stagnant, if not dropping a little bit. I don't know. Not sure.
Average orders is 53.
Well, so I think that's revenue per user. I think average or I don't know about the average order volume, if he's right on that. I'm sure that's more of a, but he said it went from 69 to 95 in 3 years.
That's great.
Yeah. But anyway, that's all.
Go up more.
Yeah, we'll leave it there. Thank you all so much for watching. But this has been Tevis and Tanner talking about the stock talk and stock tank.